Blow up that intro. Hey there, everyone. Welcome back to Inspire Sphere, brought to you by WeGrow. Today, we're diving deep into the roller coaster ride of the equity markets and how it's affected retail investors over the past 6 centuries. Trust me, you don't want to miss this. So, let's start our journey in the 16th century. Picture this: Tulip Mania in the Netherlands. People went absolutely wild for tulip bulbs. Prices skyrocketed, and folks were selling their houses just to get their hands on these colorful flowers. But guess what? The bubble burst, leaving many penniless. Sound familiar? It's like the FOMO of today's meme stocks. Why did this happen? Well, just like today, the wealthy folks back then were manipulating the market, driving prices up, and leaving the common folk to deal with the fallout. Fast forward to the 18th century, and we have the South Sea bubble. Investors were throwing their life savings into shares of a company that promised riches from trading in the South Seas. Spoiler alert, most lost everything. Sound familiar again? It was all about manipulation and greed. The wealthy were pulling the strings, and the rest of us were left holding the bag. If you're enjoying the video so far, please remember to give it a like, share, subscribe, and press that notification bell to keep up with more informative information. We do appreciate it, and it helps us get into the algorithm. Thank you. Now back to the video. Now let's jump to the 20th century, the Roaring Twenties. The stock market was on fire, and everyone wanted a piece of the action. But then came the Great Depression. Market manipulation and a FOMO mentality led to disaster. The wealthy and powerful were at it again, taking advantage of the little guys, leaving them in ruins. And here we are in the 21st century. Social media, Reddit, and meme stocks. The GameStop saga, AMC, and Dogecoin. It's like history repeating itself all over again. The wealthy are still taking advantage, promoting FOMO and manipulating the markets. But guess what? Retail investors are fighting back, uniting online and shaking things up. It's not all gloom and doom. We have the power to educate ourselves, join the movement, and fight for a fairer market. So, what's the lesson here? Be informed, be cautious, and don't let the FOMO mentality control your decisions. The more we learn from history, the better we can navigate the markets today. Just remember, history may not repeat itself, but it rhymes. Every century since the inception of the modern equity markets, the wealthy have found ways to exploit the average retail investors with promise of riches, telling them to look over here when they really should be looking over there if they really want to build wealth. A rule of thumb: don't do what the wealthy say, do what they do. Since the 1600s, the wealthy have told the retail investors to buy into the shiny things, knowing that the well had already been pumped dry. In the 19th century, it was the steam engine. Today, it's AI and EV batteries. And that's a wrap for today's episode. If you found this as fascinating as I did, don't forget to like and subscribe. Stay informed, and let's keep this conversation going. Until next time, take care and invest wisely. Stay positive.
We grew.